All right, traders, good afternoon. This is Christian from Hertz Tribeca Trade Group, and it is Wednesday, October 2nd. So, as usual, we'll do a market recap for today. We'll talk about, price action today. We'll talk about some levels that were taken out to the downside. Um, Market breadth, which I think is important right now to pay attention to. That kind of gave me a little bit of a signal about what to do with some overnight risk and just kind of put it all together. By the way, risk disclaimer: everything that we're talking about tonight is for information purposes only. I'm not giving out any advice or recommendations. Just have to say that and display that every video. Tesla had sales after hours that look like they just missed expectations, so they're down. I have no exposure there, but always kind of interested. So let's talk about a couple of things that we kind of talked about in the beginning of the day. We'll kind of start there. But one of the things that we were talking about is whenever, like in the beginning of the day, especially when volatility is present. Uh, uh, in our pre-market session, we're always going over levels to watch and index, and then we kind of drill down from there. But yeah, I mean, this was the downside levels that we were talking about where we could be taken out here in the S&P, which was 2875. I talked about this in last night's member chart forum, which I actually put out publicly today. But we were talking about that yesterday, and I try to associate a probability that where we could kind of take that out uh, last night, and I said somewhere around like a 40% probability that we could take that out. Why? Because once we start trading below a range, these areas of high concentration of where buyers and sellers previously met up, it becomes a sticking point, and it becomes just like you're searching for something. The market is searching for something. It's searching for where a lot of buyers and sellers have previously met up. So that's the concept of virgin point of control. You'll hear me saying on Twitter a lot, called the VPOC. But it really, comes up quite frequently. And I've seen it work, many, many times, especially when we're trading out of value. And that's why I really use that as a guide. And, we map these things out. It's important. So let's just talk about that. We did take that level out this morning. Sorry, this afternoon. Now, the other thing that I like to see, and again, you could see where this, if I zoom out a little bit, you could see where this is again, this is right. This, if you look at the shaded area, and I know this is sometimes difficult to look at on the video, but this is where the highest concentration of volume was for this period, and we have not revisited that. So, again, the market will seek that high area out. There's programs and so forth that this happens time and time again. So what to do now? So once that is taken out, so what I did was I played a reversion trade. I went long some SPY October calls. My initial thought was to play that for a bounce, and then if market breadth improves, then I would kind of take that trade home with me and look for a bounce tomorrow. So that's kind of the next subject that I wanted to discuss. And you can look at this several different ways. We have our own in-house way of looking at market breadth. And you could see that this will take NYSE stocks, Nasdaq, and ARCA stocks. ARCA, remember, most ETFs trade the primary exchange is ARCA, and of course NYSE and Nasdaq. You know what that means? Stocks listed there, primary exchange. But we really didn't get any better throughout the day, even on this this little market bounce where we took out that virgin point of control in the 1 hour. I was looking for breadth to improve. It did not. It even took a step back here. So that to me is not confirmation that the downside is complete. Now we don't always need that. It's things are always not 100%, right? So you have to play with probabilities. So that would give me, if we started to see buyers come back into the market, and buy the dip, and basically, big guys, institutional, big guys and girls, institutional. Once I see somebody kind of making a stand that they're thinking something is attractive, that kind of compels me to say, okay, buyers are coming back into this market. But we really didn't see that. I think when this happens and breadth does not improve, I think for the most part it's a little bit of short covering. Guys who are short taking profits, right? Which is same thing. We see that on the upside too. When guys are long, we reach a certain threshold, people take profits. Market comes in a little bit, but I don't see this as a change in trend. So again, something can happen in the overnight markets. That's not 100% guarantee. That's just my feeling that that would kind of compel me to go longer. Let's also look at this in terms of if we want to look at break this down, which I like to show almost every day. What we did after the open. Again, not a lot to really hang your hat on here. There wasn't many things other than just a couple things that finished in the green for the day. Biotech, which was a little bit of a surprise. Right? This has really been beaten up. I'll look at that chart in a minute. Chinese internets. Let's see. Do I want to touch this subject or not? Well, we're kind of faced with a lot of issues when we're traders, right? We don't want to be political. You'll never really see me send a political tweet out. I don't do that. I don't mix, politics with trading. However, politics right now are a part of, what we're dealing on a day-to-day basis. So, to kind of think about this in terms of a game of chess, and to try to stay a couple moves ahead. And again, think about the averages, right? So when I mentioned the word impeachment, I don't know what the odds are of an impeachment happening. But what happens if that does take place? What's going to happen to China names? It depends, I guess, who would take over office. Are they going to remove, or will there be a trade truce? So I don't know if that's partially the reason that China internets, and maybe we're seeing a little bit of lotto plays in FXI calls and things like that. But think about that rationally with percentages, right? I mean, you could go and you could check, like, there's various different sites that will tell you right now what the probability of impeachment is. And again, try to separate your emotions, look at the probabilities, and what would happen to all the tariffs that we have on China. Would they be suppressed, if that happens? And what would happen then? China would probably rally. And again, you have to kind of associate a percentage with that. But anyway, I just wanted to it was something that I was thinking about, and today, and you can kind of think about that on your own, obviously. Gold miners, those were the only other area that was really up on the day, but they didn't even rally after the open. So you couldn't pile into gold miners today either. Energy stocks, they continue to be on the bottom of the list. They are all in downtrends. So I think you want to watch out for that. Even some of the defensives, right, which have been the hiding places, right? I was talking a little bit about Procter and Gamble today, which has been like the best chart I've seen anywhere. Weekly chart. This, maybe you have a bearish engulfing here, just barely. Maybe that comes in a little bit further. Again, nicest chart, out there. I think, anyway, in terms of straight 45-degree angle. What else? I think utilities actually were down 1.1% too, which was that the SPY finished down 1.7%, so that's kind of right in line with the market. So you couldn't really hide in defensives today either. So that's kind of what we're faced with right now. It looks like more market deterioration. I did not, like I said, I did not like the market breadth. I think the next exercise, and then I'll talk about a few other concepts during this video, but is to kind of go through sectors and see what's going on here. Now, SPY again, has not fully, is back to this range. We talked about that version point of control being taken out. we're close to the 200-day moving average. I did notice some other things breaking down. Internet stocks, have broken. Internet stocks for the most part, especially the FANG stocks, have not been market leaders all year long, right? You can't really say that those have been market leaders. They lost their market leadership last year and never returned. But that's a virgin point of control down there. But, bottom line, this looks broken. It's below the 200-day moving average. That's a hands off for me. Especially to take a step back, I am mainly a trend trader. I stick with the trend, and if the trend breaks, for the most part, it's a hands off for me. Also, the software names, right? We talked about this I think in last Thursday's video. Seeing some signs that this could break, and this has broken to the 200-day moving average. And again, not so much. I'm not sure if I would consider that a hammer bar. Maybe watch to see what they do tomorrow. But that's a break of the 200-day moving average. The other thing I didn't like about this is this 50-day. Looks like it's really rolling over fast on this. If we look at some other groups, consumer discretionary, still above 200-day moving average, looks more similar to the S&P chart. Financials, they've been a mess all year long. A couple days now with big red candles, back in the range. Industrials also hit over the head the last couple days, especially with the ISM number. What else? XLV, also back to this range, has broken this level, back to this range. I mentioned I would talk about biotech because it did come back. So, this is something I would keep an eye on. When sometimes we do have these market corrections for a couple days, biotech is one of the first things that I see a lot of, not 100% of the time, but biotech is one of those things that seems to rebound first. It tried to do that today. I think okay, but this is going to be challenged too, right? Even if it comes up to here, we're still pretty decently broken this 200-day moving average, which was sideways. All right, and then the defensives, XLU coming in today, XLP, IYR, also just down to the 50-day moving average. Again, the defensives look continue to look stronger than everything else. And I'm missing a couple, that's USMV, but XLE again looks broken, and has gone down almost every day since the drone attacks in Saudi Arabia. So tomorrow, what do we have, right? So when I give these videos, I really like to talk about the future rather than kind of dwelling on the past. I just wanted to cover this one other point, and then we'll talk a little bit about market sentiment too. So, this ISM number, which is getting all the attention, which is kind of the catalyst for the sell-off. This manufacturing number, right? In my opinion, we kind of already knew this, right? That manufacturing was going to be weak. Maybe not this week, as weak as it came in, as the severity of the weakness. But if you look at your manufacturing stocks, your steel stocks, this has been declining now, partly due to the trade tariffs. But, this group, like if you want to look at U.S. Steel, for example, this has been in a decline now for a while. So the writing was already on the wall in terms of that. And if you go through and if you look at other manufacturing stocks, you're not going to find a whole lot that you like. Most of these stocks have been in downtrends. Caterpillar has been a little bit better, but Caterpillar's in a downtrend too. It's below the I defined uptrend, downtrend by the 200-day moving average. So this already, I think the ISM number, again, I think it surprised some people, but I think we already knew this, didn't we? I mean, looking at this, I think the stock prices remember, stock prices are also a leading indicator, along with ISM and PMI numbers. So there's no, you know, I don't think there's much of a surprise. And again, I talked about this on Cheddar TV yesterday. And I think a lot of other people are talking about this too. But we know that this trade war has been going on for a year and a half. They just announced more tariffs for against Europe. The real question is going to be when the administration says, can't take the pain anymore, right? Because the administration that we currently have is running on a platform saying that the U.S. economy is the strongest out there. If this starts to break down, at what point do they say, "Hey, I can't take any more pain"? If that's the platform that I'm going to run under, and they're going to have to start to back off the trade wars. I don't know what threshold we get to before that happens. I was talking about how it's a silver lining that these numbers are coming in weaker, because really, right? I mean, what's the root cause of half of this? Probably the trade war. Global growth is probably not all. You could use a scapegoat for the trade war, but there's definitely this is impacting things. So, that's going to be the question, because you could see from fund flows and everything else that I've been talking about, funds, right, the big boys and girls of Wall Street are not putting money to work right now in higher beta areas of the market. They're hiding out in equities. They're going into minimum volatility equities, USMV. So until this trade war gets situated, it's going to be very difficult for us to have any type of sustained move. So where does that leave us for tomorrow? I talked about a little bit today the put call ratio. Finally, it did show some a little bit more extreme bearishness, right? A lot of times we want to use these things as contrarians when everybody gets bearish. You want to be looking to the other side. Same thing when everybody gets bullish. You want to be locking in gains when everybody gets over the tips of their skis in one direction. So that's kind of what we have. We're starting to check those boxes, but it's not everything yet. Another thing that's a little bit that I would keep an eye on is credit spreads. Right, the credit market. I agree with what I think it's Tony Dwyer says a lot. The risk shows up first in the credit market. You could see this is edging up. So we have not taken out the August highs yet. So I don't think it's extreme yet, but it's certainly made a decent move the last couple days. Again, that's IEI versus HYG, which I think is better than IEI, better to be used than TLT. All right, so that's the situation there. A couple orders that we saw. Just keep in mind. I try to go over this as much as possible with option flow. I think people get hooked up into, they see a call buyer in something, they think they know something. I would say my own feel is 90% of the time they don't. They're just taking a shot at something. We saw Visa calls go up yesterday. Visa's down 2.5%. This is a name that we've seen calls the last couple days. FIS, call buyers the last 2 days. But this chart looks broken to me. So you have to figure out, just because there's a call buyer, that's, to me, I use two things, right? Okay, it's interesting that there's a call buyer. But if the chart says no, then I sometimes, either don't participate, or if I'm going to participate, it's very, very small. Take Two saw calls today. It's kind of similar look. It looks like it's broken down. I think we could be headed down here in Take Two. So keep that in mind. These guys, I hear it a lot with the option activity, and again I try to be to tell you guys something that's a little bit different than what everybody else, what every other option jockey on Twitter has to say. And it used to be years ago there was an informational advantage. I'm talking 20 years ago, where sure funds would know something, where they would get information before the public would have it. That's not. I'm not saying that they don't have any advantages, but that's not as much the case as it used to be. So that's why, if you look, the majority of option trades don't work, that we see on the tape, because they're just taking positions like everybody else. They just are a little bit bigger than everybody else. So again, I can't tell you, what to do, but for me, it's the more that you could kind of get that out of your head, um, or I'm sorry, the more that I can get that out of my head that they probably don't know anything, the more losses I could avoid from bad trades that we see on the tape. And using my own model, for that. But I'm just giving you some of the trades that went up today. And maybe you can set alerts, but this is broken out of the range. So again, if I were to participate in any of this stuff, it would be on the small side. I could tell you right now, I did not. Oh, except for this one, I did take a tiny one. I'm sorry, FIS. I did not take that one. So again, here's another chart that is broken down. So I added tiny, and then I'm in that take two November 120 calls for a shot. These are all my other trades today. I did start a SPY position going out to January this morning. Boeing day trade. I added to our long-term portfolio, right? The tactical portfolio, that I've set up for like longer term. I mentioned the FIS tough one because chart looks weak, right? And here's where my parting thoughts, which is kind of where I am right now. Continuing to position light, and I think that's right now. That's how to be right now in this market. All right, guys. So video over 20 minutes, and we'll leave it there. But obviously a very challenging market, and other than a few boxes being checked in terms of being oversold in the short term, not a ton of things to kind of hang your hat on. All right, guys. Have a great night. See you tomorrow.